Most investors are focused on the daily price charts, but they're looking at a ghost. While the COMEX paper price fluctuates, a massive vacuum has opened up in the physical market. Between the Supreme Court's recent decision that S left a legal vacuum in tariff funding and Samsung OS quiet acceleration into solid-state tech, the silver we see today may be the last cheap silver we ever see. In the next few minutes, I'm going to show you why the smart money is paying 30% premiums in India and Singapore, and why your target for March 2026 isn't just a number, it's a countdown. Welcome to Nexis News. Well, let's start with the breaking news. The Treasury Secretary's statement on missing tariff funds. We're talking about billions of dollars that have vanished from the federal ledger. As our viewers have pointed out, the Supreme Court AS recent rulings often leave a legal vacuum that blue states and institutions are already exploiting. This isn't just a budget error, it's a liquidity crisis. When the government can't find its own money, they turn to the one thing they can't print: hard assets. We are seeing a move toward a price floor for precious metals for national security, and if that happens, the government may claim first right to all silver. If you don't have it in your hands, you don't own it. Now, let's address the Samsung connection. In our previous investigation, Samsung's underground operation exposed, we showed you the stockpiling. But here is the 2026 update. Solid-state batteries are no longer a future tech. They are hitting the assembly lines. As you've told us in the comments, these batteries require silver to function, and there is no current substitute. Industrial giants like Samsung aren't buying from your local coin shop, they are buying out entire mines. This is why you're seeing record demand, even as the paper price crashes. They want you to sell your physical stack so they can fill their industrial vaults at a discount. Some of you have asked about our video, Silver's days are numbered, graphene takes over. Is graphene really going to kill silver demand? The short answer, not at $30 an ounce. As many of you correctly analyzed, graphene substitution only becomes viable when silver hits $3,000 per ounce. Until then, silver remains the most conductive metal known to man. For AI, solar, and Samsung's batteries, silver is the only option that works at scale today. We are seeing the graphene myth being used as a psyop to scare retail holders into selling. Don't fall for the paper trap. Where does this leave us for March 2026? While banks like HSBC are being conservative with $88 targets, our community is seeing the bigger picture. We've seen predictions in our comments for $200, $300, and even $500 silver by next March. Why? Because the gold to silver ratio is historically broken. If we return to a 1980s ratio, $309 is the baseline. With the COMEX running at historic lows and China controlling the export pipeline, the math for triple-digit silver is becoming unavoidable. We are heading toward a margin hike world, where only those with physical metal will survive the reset. Finally, the most important question: what is your exit plan? If local dealers aren't buying because they're out of cash, you need to know who the industrial buyers are. We'll be covering how to sell directly to industrial refiners in our next video. Don't let the rigged system shake you out. I'm John, and this is Nexis News. Subscribe and turn on notifications. The window for physical possession is slamming shut.